Now, Chapter 8, uh, Principles of Accounting. First part, Internal Control and Cash. Last time that we covered Chapter 8, but from last time, let's just quickly remind ourselves. Internal control, what's the internal control? That's process that we put in place to provide a security or assurance for the organization key assets, which will be in terms of internal control objectives. So if we finish the internal control objectives, which are the objectives? Encouraging operation efficiency, preventing, detecting the fraud, safeguarding the assets, provide accurate, reliable information. So once we saw that what the objectives are, then let's see what the fraud is. Fraud is a process in which three what would be that? Three objectives are met. First, we have a pressure, then we have opportunity, then we have realization. Realization of the term of the converting something into fraud. Pressure, that's something that's happened at the end. In the middle, we have opportunity. In the beginning, we have some kind of pressure. Now, you as a managers, one day, what I want you to remember is to cut the opportunities. Once you cut the opportunities, then uh, you can prevent a realization not to happen. In order to cut the opportunity, you have to put that internal control system in place, and you have to come up with the control procedures. You always have to do risk assessment. We have to safeguard and protect the information system. You have to monitor all the control procedures that you already come up with and implemented. And the last thing is always to stay with the environment and to change the environment if you have to change the environment. And now, internal control procedures, effective system will have, we're going to be complete, reliable, and ethical personnel. When that personnel comes to your company, then you're going to have an environment in which you can put that internal control procedures. Now, separation of duty is one of those procedures. Separation of duty is to separate the custody of the asset from the accounting and authorization of the transaction from the custody of related asset. And the last one is to separate the operation from the record keeping. It's most important the person who's entering in the information system to be reliable, and at the same time, he's not the one who is involved in operations, if it's possible. Another things that you can do in order to prevent or increase the internal control is to have a proper authorization put in place, or have internal or external auditor. Use of documents in the record is another technique that can increase the internal control and prevent the opportunities. Prevent the fraud by cutting opportunities. Every time when you have a pre-numbered documents and you keep the records and those records are recorded and there's a backlog on the records, who entered it, when it entered it, so the date and the number of the records, then you have you can trace back those records and you can find out what exactly happened. Obviously, use of electronic devices, computer controls, that will be something that you're going to have to do in the everyday basis, the way it goes, and the environment that you're going, most of you, everything will be on the electronic devices. So now, what exactly is going to be device? It's going to be computer, it's going to be a laptop, it's going to be a tablet, it's going to be a cell phone. That's a matter of perspective. Once we have those, we have to be aware of some pitfall for internal control, which will be the everything that's come with from the internet or from using that information technology system. Threats, what's the potential results for the threats? We already saw enough movies on this area, how the people losing their identity, how they're losing their sensitive information, how the identity is stolen. Encryption is one way to prevent this to happen, at least make it a little bit more harder to the people who are trying to steal your identity or to store some credit card numbers. Try to encrypt and put the firewall in place. Always think about collision. Collision will be when the more than two people getting together or two or more people getting together and work together in order to create more opportunity and to circumvent the internal control system and the cost benefit analysis always. Cash and cash on hand and cash deposit and cash equivalent is the definition of cash. In some instances, by definition, the overdraft is also part of cash. Overdraft is the limit that some bank allow you, especially for the businesses. If the business is long-term, have the long-term relationship with the bank, and the business is trustful, everything is okay, bank can allow the business temporarily for the short period of time to go on the credit balance. Means credit balance in terms of the client point of view in the bank will be on the debit balance, means overspend the available cash that they have in the bank account. That's also considered cash. So cash is cash on hand, petty cash, cash on the deposit, on deposit in the bank and trust companies, and cash equivalent plus overdraft. I saw questions where when you look at the balance sheet, cash is zero, and then we take a look at the short-term current liabilities or short-term liabilities. You see overdraft $200. That means the cash position is minus $200. Bank account obviously is used for cash accounts, which are under control of the company. And the document that we can find in this bank account is the signature card, deposit slip, checks, bank statements, paperless banking. Now, most of the banking, they push you to have this online statement, everything to be distributed online. We already passed the time when all the statements were available on paper and sent by mail. Now everything is online, and if you need bank information, bank statement, you can just go and print the bank statement. The check looks like this, or we can have a different type of vision of the check. I'll show you something that I give today to the students in class. Also checks. Try to give them some opportunity they to see check and or write a check if they want. So I end up showing them this. Just a second, I'm going to share my screen with you. I end up showing them these images. Let me see what the images are. Have to be somewhere here. Here we go. Those are the images that I post them. So basically, that's a check. Down the top left corner, either you're going to see the name of the bank, either you're going to see the person who issued the check. Then the date will be what you have to put the date of the check, date, month, year, number, check number, to whom you pay in order of, and you write the person or the payee who received the amount that you're going to put here as with Arabic numbers. After that, you have to type manually or print with letters the
Those
same
checks
amount.
don't comply with the new check standards.
I know. This is just a sample. That's why this is just a
It's just
sample.
funny.
Yes, I would just found it on the internet and kind of fancy. That's why. But basically, that's the idea with the check, right? With the new check standards, we're gonna go to the Canadian. This one is obviously that's from America, the US. This one is the Canadian check, which this one you can easily see. That should comply with the available standards, correct?
No, it doesn't. The
It
date is
doesn't.
in boxes, and the bottom of the check should be all white, like where the
The
micro
bottom.
number is. the
Here should be
yeah,
all white.
yeah,
Is that how they're doing the checks now?
yeah. That's been the
Oh,
standard for like
phew.
18 years or so now.
18 years now? Okay.
Something like that. Yeah, the data's in boxes instead of having a line. It has eight
All right.
boxes at the top, and then it's
All
all
right.
white on the bottom.
Which bank you working for?
I used to work for RBC.
RBC. Okay.
Yeah.
How is RBC?
It wasn't bad when I worked there, but it's been a while since I've been there. I
Okay.
stopped working there right around when we got plastic money.
Ah,
Yes.
the plastic money.
Yes.
One day, probably we're gonna get rid of the checks too, right?
They're getting more and more rare every year.
Yes, they do. But those are the sample of the checks that I found as a sample. Again, it's just a sample for you to see the basic thing, the name of the issuer, the who you're paying to, date, amount, written amount, and memo and signatures here. That's all the purpose of this, you to have some sense of the checks. For those of you who never see checks, for those of you who have seen the checks, thank you, Adriana, for bringing this extra information. So let's go back to the slides. On the slides, okay, the slides probably come to some extent matching the objectives of the checks, at least the date is in the boxes. So from the check, once we get the bank information, we have to prepare the bank consolidation, bank reconciliation. Before we go to the bank reconciliation, we're going to skip it again and we're going to go to the internal control of the cash. Now, when we remind ourselves about the accounting system, we have two journals which are dealing with cash. Cash receipt journal and cash payment journal. From those journals, we're going to extract the information, see what's inside, and we're going to prepare the bank reconciliation based on those two journals. Now, since we have a cash receipt and cash payments, we have to put some internal control over the cash receipts. The cash receipt depends how we receive the cash. One way is to get the cash over the counter. When it's over the counter, you have to make sure that there's printing, something on printing that counts the cash that is received. And then you have to compare the slip that you have with the total cash you receive with the actual cash in the drawer. That's standard procedure for the cashiers in every grocery store or in any store which is dealing with cash. Every cashier has his own drawings with his own cash. And the end of the shift, when they're changing one cashier to another cashier, the previous cashier printing all the transactions that happen on his shift with the total going directly to the management office. The management office compare the amount that's sitting on all this printing with the cash which is inside the box. If they're matching, everything's fine. If they're not matching, they probably start looking for something. Internal control of the cash received by mail, that will be, nobody says mail, cash in the mail, obviously, that will be checks. So you have to separate the person who receiving the checks versus the person who entering the check in the system. That will be crucial. Otherwise, you're gonna might end up with problems. Now, what we're gonna do when the cash is short or over, we're gonna use a special account which is just called cash short and over. So at the end of the day, when you print all the transactions from the cashier shift, you're gonna see how much on the printing, how much are the sales. And if the sales are 15,000 in this case, you're gonna create sales revenue. Now, what you have in the drawer, that's a different story. You're gonna count the cash in the drawer, depends on the amount that you're getting. Then you're gonna debit the cash. If there's a difference between the revenue on the printing and the cash which is in the drawer, that's gonna go to the cash short and off. Payments. What we're going to do with the payments? Obviously, we have to put some control on the checks, which we're using to pay our vendors, who authorize the checks, and who handle the checks when they're signed and who send it in the mail. Now, before we go to that point, it's always important to have some control on the purchases. Why the item is purchased, who purchased it, what's the needs, when is the item comes, where the item goes. You already know with the purchase orders, all of you are doing this online. Now, in the online shopping, you can easily see the same process. First, you have an order. Once you go onto the website, you start looking at the items. If you like this item, you click on the item, you add it to the basket or to the cart or whatever they want to call it on that website. Once you're done, once you finish and put it in the basket, ask you, do you want to continue shopping or you want to go to the purchase point or payment point? And then you can say, no, I can keep shopping. So you keep shopping, adding. That's your purchase order. Once you finish with the purchase order, you're going to the basket, check what you purchased, confirm the quantity, confirm the price, and then you're going to the next point, which is the payment. Now, on the online system, in the online environment, now the process of or the steps of the purchase order, invoice, receiving, and payment are purchase order and payment are all together, and after that coming the invoice and shipping of the items. If you don't have the online, what's going to happen is first you're going to have this purchase order, which the purchase order is sent to supplier. Again, if you're online, you're getting the purchase order, which directly communicate with the supplier website because you're on the supplier website. Constantly check. Once you finish your order, then you pay, and then the invoice comes. It might come, it might not come, as a separate email, or directly you can see it as a receipt. And then the items are shipped. In reality, in the world with the checks, you're going to have the purchase order sent to supplier. Supplier is going to send you the inventory, and on the separate email or separate mail, going to send you the invoice. Inventory is going to come with the copy of the purchase order, where the invoice is going to match the purchase order with the inventory shipped. Then the company is going to issue check and going to send it to supplier. That's with the environment when there's a checks issued and checks used. Now with the technology, we can modify the process, but again, we're always going to have the purchase order. Now we have the payment right away, and then the inventory shipped with the purchase order inside the inventory, so you can confirm whatever you receive, you actually receive it. If you have some items that you want to return, you can use the purchase order as a document to make some return if you want to make a return, and there might be the invoice inside if it hasn't been communicated already with you. For the PT cash, PT cash is short amount of cash which is always keep in the office of the company. We're going to designate one person always to keep track of the PT cash. So he will be in charge with the PT cash. Where we're going to put it, we're going to put it in some secure location or some box or anything like that, which is protected with the key. And now what this person is going to do with the cash, every time when there's some small payments in terms of no more than $5 or $10, and within $10, he's going to use that PT cash. For everything else, we're going to use checks because we want to limit the amount of cash in the office. So every time when the person spent $2 or $3, whatever amount spent, there's they have to be either ticket, either voucher, either some receipt for what the money has been spent, who authorized that spending, and how much is the amount. And occasionally you can do audit to see if the receipt plus the cash on hand equals to the amount which the petty cash fund is set up. Let's pretend that we set up the petty cash fund for $400. So what we're going to do, we're going to take the cash from the bank or from somewhere, we're going to withdraw the cash and we're going to put it as designated as a petty cash. Now, when we start using the cash for the receipts, there will be no journal entry. At the end of the day, or at the end of the month or at the end of the period, we're gonna replenish the fund. What that means, replenish the funds, we're gonna add the amount of the money which are not on hand back in the petty cash. So the fund can always keep $400. So the idea is this. If you set up the fund for $400 and designate as petty cash, that petty cash always have to be $400. Or the cash on hand plus the tickets and the vouchers and everything has to be $400. So eventually, if you spend all the $400, you're going to have zero cash on hand and receipts or tickets and vouchers for $400. That's ideal situation. Then what you're going to do, you're going to add another $400. You're going to pay all those things with, and then we're going to do the journal entry for the tickets, vouchers for the amount that the vouchers are. We're going to debit the accounts related to all those vouchers, expense purchases account, and we're going to use the cash. Cash which we're using is going to go directly to the deposit box, and we have another $400 to spend. In this company, what's happened is they started with $400 in the box. They start working. They're paying tickets. At the end of the month, we decide, okay, let's check what's happening. And we're starting. The funds, $400. We count the cash on hand, we have $230. We check the vouchers and the receipts and tickets and everything that we found in the cash deposit box, which that person collecting during the month. And we found that we have tickets for $164. In total, we have cash plus ticket for $394. We're supposed to have 400, but we have only for $394. So for $6, we don't have anything. We don't neither have a cash, neither we have a ticket. So most likely the person spent $6. There was no receipt, nothing like that. So what we're gonna do in that case? In that case, we're gonna do for the journal entry for all the spendings, which for the tickets. So those tickets can be office supplies, can be delivery expenses, can be selling expenses, anything like that. Then we're gonna debit cash short and over for the money that are missing, $6, and $164 for the expenses, plus the $60 that we have to add to top the amount to 400. It's 170, and we're gonna get it from the cash, and we're gonna do again expenses, cash. We're not gonna touch PT cash account at all. But now, since we know that in PT cash we have 230, and now we put another 170, we're gonna have back $400 in PT cash. And that's what we're doing with the PT cash. That's how we're dealing with the PT cash. The other option is we to have more cash than the receipts. In that case, we're going to create cash short and over and keep going to the next period. Ethical. Ethical business judgment is always required from the professionals and always required for you as an accountant. There's a code of ethics that we have to follow. Now, some of the ethical standards are written, sometimes they're not written. No, written. I still remember this movie. I don't know if you still remember, but that's an old movie. Some of you may have seen it. Few Good Men. That's with Jack Nicholson, Tom Cruise, Kevin Pollak, and he's a lawyer. So basically, it was very interesting in the military thing. They would try to convince the jury that the soldiers did something which is have a term, which term is internal term, not written anywhere. So they confirmed that the term exists, and then one of the lawyers asked, "Can you please show me in which book I can find this term? Is it in this term? Is it in this book? Is it in this book? Is this book?" And everybody say, "No, no, 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 it's not a book." And then the control argument of the other lawyer was, "Can you show me on any of those books where is the mess?" And the soldier looked at him. Well, there's nobody says where the mess is. Then that means you're not eating. No, 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 we have a meal. Then how do you know where the mess is or the place that you have to eat when there is not written on any of those books? Same thing we coming with the ethical standards. Some of them are written, some they're not. Some of the ethical standards is when you walk in the uh, what I'm trying to see something because on the SkyTrain usually says this seat is for the older people or people with disability, but it doesn't say that you have to leave the space for those. It's reserved for those people, but if you don't have, it doesn't say that if you see those people, you have to stand up, does it? So how do you know that you have to stand up if those people come? It's not written anywhere. And that will be the ethical decision and ethical kind of guidance that we have from the society, which rules are not written anywhere, but we are kind of using it. Another unwritten rule is for the gentleman when you're approaching the door and see the uh, email coming, you can just open the door and let the other person come or enter. Is that a written rule? No. Do you have to do it? No. Is it ethical? Yeah, it can be considered ethical. Is it nice gesture? Definitely it's a nice gesture, or just to hold the door for the next person who's coming. You're not slamming the door once you close the door, you just slam the door. That will be unethical. But anyway, even if you do it, there's no written rule that you shouldn't be slamming the door once you enter uh, the premises that you're entering. Right. So for that reason, we're always going to have ethical judgment, ethical rules. Some of them are going to be written, some of them not going to be written. You as a professional, you have to be aware of those things. And the other thing is that you have to be ethical in order to be perceived as an ethical person. Who's going to define what is ethical, what's not ethical? That's most likely will be the environment and most likely society that you're living in currently. What that means is that if you're changing the environment and changing the society from one society to another society, the first thing that you have to do is to establish what's the ethical standards in the newest society or the current society that you're currently present. If the standards are the same like the previous society that you've been present before, then you can apply the same rules. If they're not, you have to adjust to the new rules. It's like playing a game, computer game. If for one computer game you're using shift and uh, the key for C and V to move around, on the other game you can use only arrows up and arrow down to move in the game. So imagine if you for one computer game you're using one rules and then switching to another computer game is still using the previous rule from the previous game, you're never going to be successful. Well, the same thing happened in reality. If you're applying the same rule from the society that you left and moving to the new society and applying the same rules from the old society, that's not going to work. you're never going to be successful. So that's for the ethical standards. Careful with those and adjust to the reality. Now let's go to bank reconciliation. That's more interesting. Now bank reconciliation and bank reconciliation. In the bank reconciliation, what we're going to do? We have to compare two records. One record is going to be the internal record from the accounting software that we're using. Second record is going to come directly from the bank. Now, which one will be leading one? Usually the bank always the leading one. The bank is going to tell you exactly what's the current situation in the bank. Now, is that going to be actual reality? That depends. If there was no timing difference, whatever it seems shows the bank balance, that will be available balance for the company to spend. Unfortunately, we have a timing difference. What's the timing difference? Since in the bank, we have two events which can affect the balance in the account. One event is depositing money. The other one is using the bank account for payments. So we're going to have two events. One will be related to the deposits, which are deposited in the company and the company books, but hasn't been deposited yet in the bank. And the second one will be with the checks, which are issued from the company, signed by the directors from the company, sent in the mail, but hasn't been cashed yet from the recipient of the check. That's going to be called outstanding checks. Now, today I have one of the students ask me what outstanding exactly means. Outstanding means that the check has been recorded in the accounting records as a debiting accounts payable, so reducing the accounts payable, creating cash. So the cash already been reduced in the books. Now the check is in the mail. That means the client hasn't received the check yet. One possibility. Or the other possibility is the client received the check, but the client hasn't, that will be the vendor. The vendor hasn't deposited the check yet in his bank account. So that means the money on the check, if say, let's say the money on the checks are $1,000, those $1,000 hasn't been deducted yet from your bank account. As long as the money are sitting somewhere, hanging somewhere between your bank, your accounting record and your bank account, that's called outstanding check. The other option that you have is outstanding deposit. What's outstanding deposit? Again, the check has been received in your company. Somebody did the debit, cash, credit accounts receivables. Now somebody has to physically move the check from your company into the bank. As long as that check is in the moving process from your company into the bank, that's outstanding deposit. What is outstanding? Outstanding is from the perspective of the bank. It hasn't been deposited yet. Outstanding check is outstanding means that it hasn't been deducted yet from your bank account. The next thing that we're going to see is the electronic fund transfer, which are directly received in the bank account, but you have no idea that has been received yet until you see the bank statement. And the last thing is bank errors. Those are the adjustments that we have to do in the bank to the bank reconciliation. The other thing that we're going to see in the books, what we're going to see is we're going to start with the book balance at the beginning, and then we're going to start making adjustments. Why we need to make adjustments? Because maybe the bank collected something for us, which is not in our records. Maybe because there are some service charges from the bank, which are not in our records yet. We might receive some interest on the checking account, which checking account these days they don't pay any interest, but long time ago they were paying some interest. So you may see some money coming in. We may have non-sufficient fund checks. That's another interesting thing with checking uh, accounts and the checks that people sending to each other. Now imagine this. I provide the service, $1,000 for a client. The client didn't pay me because he has a credit terms of 15 days. After 15 days, I am receiving check from the client for $1,000. As soon as I receive that check, I'm gonna make a debit cash credit accounts receivables, and I clear the account for this client. Now the catch is I just received the check. I haven't deposited the check in the bank yet. I just received the check. And that's the tricky part here because once you receive the check here in Canada and US, we're doing the journal entry, debit cash, credit accounts receivable. We consider this account settle, the client pay his balance, $1,000. What's going to happen next? We're going to get the check, we're going to go to the bank, we're going to deposit it in the bank. The bank's going to take the check and going to say, okay, looks fine. I'm going to deposit your bank account in with $1,000. So now the check that we have already recorded in our books went to our bank account. That check is not longer outstanding. Now it's in the bank. Now, the bank, again, it takes time the bank to confirm and to take the bank to take the money, the $1,000 from the client's account or the vendor's account, which is the client account in this case, which is sitting on the bottom of the check that we saw. Now, Adriana is going to correct me here how many days, but usually it takes 2 to 3 days. That check to clear in the system. That's how they call it. Clear in the system means that the bank who received the check make a requisition to the bank that he issued the check, and they transferring the money, taking the money from the client's account and deposit it to the supplier account.
Yeah, unless the check's coming from out of the country, that's about right.
Right. The best case scenario that the bank love it is when the check or the bank account for the client and for the supplier are in the same bank institution. Then as soon as you deposit the check, now these days the teller can tell you there's no money in this account or there is some money in this account, we can accept this check. Why? Because there's in the same bank institution. You won't be able to see it, but the teller or the person who's dealing with the checks would be able to see it right away. Anyway,
We wouldn't
uh,
be able to tell you there wasn't enough money. We would only be able to tell you, I'm
right.
sorry, we can't do this check or can't
Yes,
cash this
yes,
check.
yes, exactly. That's no reason. You're not going to give me the reason, right? But you can say no. There's no. You cannot cash this check, right? Unless you decide to cash it, and then there will be a letter coming that says your bank account anyway is going to be. So listen, the catch is this: you receive the cash, you put it in your accounting records as a received. You put it in the bank deposits the money in your bank account. 2 days later, the bank taking the money out of your bank account,
And then charging you for it.
$5, right? So what's happening is the bank tells you that we try to get the money from the client account that you give us, but there's no funds in that account. So whatever we give you in the good faith, now we're taking it back. But now there's a problem because you already cleared the client account in your accounting records. So what do you have to do? Unclear it. Means bring back the accounts receivable because you haven't received the money. Plus you incur extra charges for $5. Makes sense. That's with the insufficient fund. We're gonna see how exactly works. The next thing is the cost of the printed checks. If you print the checks that come with the cost and bank errors if they book errors in this case. If we make errors in our books versus the bank. So in summary, what we have to do is two calculations. One calculation is for the bank, the other calculation for the books. In the bank, we have to see what's the balance, And is this the balance actually available for us? If we don't have deposit in transit or outstanding deposit, if we don't have outstanding checks, if there's no bank error, whatever the bank says, that's exactly what you have. If you have deposit in transit or outstanding deposits, you have to add it to whatever bank shows you as a balance. If you have outstanding checks or means checks which hasn't been cleared yet from your bank account, which you send in the mail, those checks have to be accounted for or reduce the available balance that you have. That's for the bank. For the books, we're going to match the books to the bank records. And that's our bank reconciliation. So now let's start practicing because the best way to do the accounts reconciliation is practice. Like everything in life, whatever you want to achieve is you have to practice. More you practice, better you be. Less you practice, less you practice. Let's leave it there. Okay, let's start with the first question today and let's move with the first question. Stop sharing the slides and go directly to the question. I'm going to grab question 1, which is posted for you on Blackboard under chapter 8. Yes, that's exactly the movie. You got it, Adriana. You need me on that wall. You want me on that wall. Right? So let's go. You need me on this bank reconciliation. You want me on that bank reconciliation. So let's see how we're going to do the bank reconciliation. First, you're going to have information. You're going to have two type of information, actually three type of information. First information will be what happened before. The good thing with the accounting is every each of you, if you have the courage, every each of you can work as an accountant. Even if you don't know anything, what you have to do is eventually you're going to learn. The accounting is a learning skill. And it's a logical skill. So eventually, as long as you're a logical person, you're going to learn it. How are you going to learn it? The beauty of in the accounting is the event, which event trigger transaction. And the events usually repeat in the future or in the past. So what do you have to do? If finding the event that has been due before or repeat again, go back to the records, see how the event has been solved, do the same thing. For that reason, it's very important you to see what the people did in the very beginning. That's why the bank reconciliation from the previous month will be available for you. So then you're going to see what these people did in March. In March, they starting with the bank balance and they come up with the adjusted bank balance. How they adjusted? First, they added all the deposits which were deposited in the book balance, but not deposited in the bank, and they added. Then they deducted all the outstanding check that hasn't been cleared by the March 31st. Once they do that, what happened is the bank statement, the adjusted bank balance, is equal to the adjusted book balance. And then we're going to start next month. How are we going to start? Again, we're going to run your calculation. One will be for the bank and one for the same thing. We're going to do exactly the same thing. We're going to do the bank statement balance and we're going to do the book balance. For the bank balance, we're going to start with the ending balance of the month. And then we're going to make some adjustments. First adjustment is going to be we're going to follow all the deposits. We're going to find out, is there any deposit that hasn't been yet deposited in the bank? If there's any deposit like that, we're going to add it as a outstanding deposit. Then we're going to see the checks which are clear in the bank, and we're going to see is there any checks which hasn't been clear yet in from the bank account. If there's some checks, we're going to add them as outstanding checks. We're going to do the calculation, see what's the balance. So in order to do that, the best way to do it is to move to Excel spreadsheet and do it there together. So what I'm going to do now is I'm going to try to create some kind of universal Excel spreadsheet in the beginning. And after that, I'm just going to flip it to you and we can use it for the question 2 and 3. So let's see how this is going to work. So first thing, I told you that the good thing in accounting is the events repeating themselves. So what you have to do, once you see the bank reconciliation, what you have to do? Well, do the same. Come up with the company name. Then you get the bank reconciliation. Bank reconciliation and then the date. We're not going to do it. That was for March 31st. We're going to do it for April 30, 20 something, yeah. So we have our starting point. Then what we're going to do is on one side, we're going to do the bank statement balance. And I'm going to add something else at April 30th, 20 something. Then we're going to add to that bank statement balance, we're going to add what we're going to add, any outstanding actually, let's put a deposit in transit. And the bracket is going to see outstanding deposits. Okay, then we're going to deduct less outstanding checks. Once we're done with this, we're going to see is there any bank errors, plus minus. And we're going to have adjusted bank balance. Balance at, again, that will be at the same month, at April 30th, in this case, 20 something. That's what we have to do in reality. So what I'm going to do is I'm going to make it a little bit more fancy here and see exactly how many columns I need. Probably I'm going to leave those columns here. This one's going to make it all the way here. So the check, that will be here, check number. I need this space here. Then there are going to be amount of the check here is going to be. And then there will be calculation. So this will be my try to plan a little bank adjusted bank balance. That will be the end of the story here. Let's make it like this so we know this is the end. X D and that will be X and that will be V here. And we're gonna get that balance right there. So my balance should be in this column. Okay, we have our starting point for the books, for the bank. The books is gonna look the same, but let's go with the bank first, and then we're gonna do the books. So again, we're starting with the ending balance for the bank statement. bank statement, let's put it here, and balance at April 30th, certain year. What I'm going to do is I'm going to copy from the question the bank statement, and I'm going to paste it right here. Not like that, that's too small, you cannot see it. But this one will be better. So which balance I'm going to get? I'm going to get the ending balance at the bank, which is 8,867, and that will be dollars amount here and dollar amount here. And then we're going to start comparing what we're going to compare. Before we go there, let's go back to the Word document and see what other information we have available. Again, we have the bank reconciliation from previous month. We have the bank transactions for the month. Deposit means credit, means increasing our balance. Charges means debit, decreasing our balance. Now you can throw me the question, uh, hold on a second, you're teaching us that every time when we deposit the money in the bank, that's debit, and every time when taking the money from the bank, that's credit. Suddenly, you're telling us that the deposit now is credit, and the payment says debit. That doesn't make sense. Totally doesn't make sense if you're looking from your perspective. But this statement is not prepared for you perspective. From point of view of your perspective. This statement is prepared from the point of view of the bank perspective. So every time when you put money in the banks owes you money. And every time when you withdraw the money, the bank owes you less money. So from the point of view of the bank, this statement makes sense. So let's see what's happened in our books. In our books, as we can see, we have beginning balance, 8,590, which matching exactly the adjusted book balance from the previous month. So on this area, we are fine. In our books, we have debit, which for all the deposits that we deposit in our books, with checks we receive, we deposit it. So debit cash, credit accounts receivable. We have $4,675 received, which is exactly the debit that we have in our cash account. Checks that we written down and sent to the vendors is for $4,041. All those checks with all those numbers. And we have credit in our cash account of 4,041. So deposits coming in, checks going out. Once we do this, our final bank for the balance for the book is $9,224. At this point, unadjusted balance. What we're going to do, we're going to see in a second. Now, first, what we're going to do, I'm going to copy this information and I'm going to go back to the Excel spreadsheet. Now, on the Excel spreadsheet, I have the bank point of view. And now I have what happened, not this one, what happened on my accounting records. What I'm going to start comparing. Which one of those deposits, which are on my accounting records, has been deposited in the bank and which one is not? So what I'm chasing at any outstanding deposits that I may have, which are in my records, but not deposited yet in the bank. So the first thing that we're going to see on the bank account, in the bank records, from the bank records, we have deposit for $1,100 on April 3rd. Question is, do we have this deposit in April? As we look, we don't have anything 1,000. So from where that deposit came from? If we don't have it in the current month, what we have to do is check the previous month bank reconciliation and check, is there any outstanding deposits in March which hasn't been deposited in the bank yet. And as you can see, there's a one deposit on March 31st that was recorded in our book balance, but hasn't yet been deposited in the bank. In April 3rd, we deposit that amount in the bank. That means this deposit has been cleared. So I can easily clear this deposit. So what you can do, you can strike out this amount right there. Why? Because I already deposited this money. Let me see if I can insert here one shape which looks like this, and if I can insert it here so I can strike this amount so we can know that this $100, $1,100, we have been deal with that. Yeah, that should work. Done. Why? Because matching the same amount right here. That's not the one. Copy it from here and paste it here. Let's see if this line is gonna show up somewhere. It didn't show. How about here? There we go. Those two amounts are checked. Next thing that I can see is on my records, my accounting records, on April 7, I have deposit for $810. The question is this money went to the bank? So as we can see is on the April 7, I have deposit in the bank for $810. So those two, they're matching each other. So I can clear this one. And the same, I can clear this one. Both deposits go. So whatever is in the books, it's already in the bank. Next one, on April 13th, I have in my books deposit for $690. The question is, do I have the same deposit in my bank? As we can see, on April 13th, I have the same deposit in my bank records. Has been deposited in the bank, so I'm good with this. So I'm gonna grab it and gonna clear it. 690 is gone. Next one, on April 18th, I have in my books deposit for $680. Are those deposited in the bank? Yes, they are. On the same date, we have deposit. So let's clear this deposit as well. 680. And then I'm gonna copy this. I'm gonna paste it right here. And then I'm clearing this 680. On April 23rd, I have in my books deposit for $355. Are those money deposited in the bank? Yes, they are. So I can clearly clear this one as well. So 355 clear. And here 355 clear as well. Next one. On April 27, in my books, I have deposited $750. Are those money went to the bank? Looks like they did. So let's clear it from the bank. And let's clear it from our records as well. Next thing that we have in our books is on April 30th, deposit $620. Are those money in the bank? Looks they are. So let's clear it from the books. And let's clear it from the bank. Okay, what's left in our books? On April 30, we have deposit of $770. Now the question is, are those money deposited in the bank? We're checking. There's no deposit in April for $770. What that means? That deposit, it's outstanding. So what I have to do, I have to add it to my bank statement ending balance. So what we have to do, I have to add the deposit or outstanding deposit from April 30. And that's what we're doing. A deposit on April 30th, 24, amount of $770, and we're gonna add this to our bank ending balance. Done with this. Once I add it here, I can deduct it from here. Boom, done. All the deposits that I have in my books have been cleared. So now the bank matching the books. Everything that I have in my books already been reflected on the bank balance. Now let's see with the checks. What we're going to do with the checks. Same idea. But now the leading point will be the bank. We check in the bank which check has been deposited, which one has not been. Actually, was cash out from the bank, or yeah, the vendor is going to deposit his check, and the money is going to get out from our bank account. So the first check that cleared from our bank account was check 811. Do we have check 811? Yes, we do. And the money that went out from our bank account is for $8,834. In our record says that check 811 is for $348. Now the way I'm seeing it, there's something fishy going on here. So let's clear first the check, this check number, matching our check number. But the amount is different. What's happening? In order to understand what's happening is we have to go and check the additional information on the question. And we're going to check that information. The question is what we're going to find out. In reviewing checks returned by the bank, the bookkeeper discovered that the check 811, which is the check that we're looking for, 811, for the delivery expenses was recorded in the cash disbursement journal, in this journal, incorrectly as 348. So, since we're dealing with the bank right now, and the bank reconciliation, for the bank point of view, is this mistake by the bank, or this is mistake by the bookkeeper? Who made the mistake, the bank or our bookkeeper? Now, the general rule is, as long as our bookkeeper make the mistake, we have to adjust our books. If the bank make mistake, we have to adjust the available balance that we have in the bank. In this case, the bookkeeper make a mistake. We're gonna deal with this mistake when we start doing the calculation for the book to come up with the book adjusted balance. So we're gonna leave it at this point. We don't need to do anything with that. Let's stop sharing with this and let's move back to the Excel spreadsheet. So check 811, we're gonna deal with that later. What I'm gonna do is probably I'm gonna put some star here. Let me find some star somewhere. And the stars, where can I find the stars? Symbols. Let me see any symbols. Probably insert, and I'm gonna insert some symbols. Which symbol is gonna look like a star. Looking for the star here. Let me see if I can quickly find some star. Otherwise, I'm just gonna check something and I'm gonna use some symbol which is probably, let's deal with this. This one looks interesting. And did it put it in the close? And then what I'm gonna do is actually I cannot transfer this one, unfortunately. This one is no. Let's do something else. Let's go with the shapes and I'm gonna get some crazy shape here. And I'm gonna put this crazy shape right here next to check 11. This one, and I'm gonna copy it and I'm gonna put it here on the check 811 V, and this one's gonna come here and my job is done. I mark it. So I have to deal with this when I'm doing the books, not right now. Next thing, in the bank, now let's focus on our bank reconciliation. In the bank on April 7, check 807 was clear. Check is for was 375 was clear from our bank account. Now let's see our records. Do we have check 807? Yes, we do. Is it for the same amount? Yes, it is. So what we have to do? We just have to cross out this check. And we're going to start crossing those checks. This check gone, and let's cross it here. This one gone. Next thing, from our bank on April 13, check 810 was clear for the amount of $208. Do I have check 210? I have check 210. Is it for 208? Yes, it is for 208. So I have to clear it. So let's clear this check, not this one. Sorry. I have to grab the line and copy the line and then paste it. And that will be right here. This one's gone. And now clear the next one, which is this one, is 210, 210 checks gone. Next one, I have NSF. We're not dealing with NSF right now. We're focusing only on the checks which were clear in our bank account. Next check is 808 for 850. Do I have 808 check? Yes, I do in my records. Is it for the same amount? Yes, for the same amount. Let's clear it. This one here and this one right here. Then I have check 797 for $60. I'm checking my April checks that I issue. I don't have 797. But hold on a second. Do I have outstanding checks from the bank reconciliation from previous month? And I'm checking here, see I have outstanding check 797 for the amount of, let's push this down a little bit, for the amount of $60, which $60, which check was clear from my bank account on April 27. Oops, so there was some, I have to do some adjustments. No, let's not do this because all the alignments, I better stay on this alignment. Okay, not gonna touch anything. I was trying to increase this one, but I'm gonna leave it the way it is. So I see here 797 check, which is sitting outstanding from the previous month. So what I'm gonna do, I'm just gonna clear it. This check has been cleared, it's no longer outstanding. Let's make the clearing 797 here and 797 here. $60 go. Next check that cleared in our bank account is check 814 for 550. Do we have check 814? Yes, we do. Is it for the same amount? Yes, for the same amount. So let's clear it. Here and here another check and done. Next one, check 813 for 372, 813, 372, clear. Let's clear it. And the last check is 819 for 124. We have 809 for 124. Let's clear this check. Okay, so the question now is, are there any outstanding checks? And if we look close, we're going to find out that there's a one outstanding check from the previous month and 1, 2, 3 checks from the current month. I'm not going to cut the alignments, but what I'm going to do is I'm going to adjust this one here. And we're going to start adding the checks. First check is check number 804 for the amount of $120. Next outstanding check is check number 812, and that's for the amount of 207. Next check outstanding is check 815, and that's for amount of 405. And the last check outstanding is check number 816, and that's for the amount of 602. Total amount of all those checks is $1,334, which total I can easily deal with that total like this. And those are my outstanding checks. The outstanding deposit is only one, 770. So my adjusted balance, bank balance, adjusted bank, and let's start here one and balance. It's at April 30 is gonna be equal to this amount plus deposits minus checks, or my adjusted balance available cash that I can operate is $8,303. When those $8,303 is gonna become reality? When somebody deposit the $770 in the bank account, and when the people who haven't cashed their checks cash their checks. When that happens, our balance will be $8,303. Why do we need to know this? Because right now, even though the bank tells me that I have $8,867, I cannot write a check for $8,500. If I do that, the other person is going to get a message, the NSF check. Why? Because I simply don't have that much money available at this point. I have only $8,303. Why? Because I haven't deposited $770, and those people which I sent the check, they haven't cashed their checks. Once they cash their checks, that will be the balance available. So let's put some fancy colors here to make it interesting. Because remember, I'm going to send you this one later. And this is the beginning balance here. The deposits, it's going to be money coming in. And the outstanding check is going to be money going out. And the bank errors, if we have bank errors, that's going to be plus minus. Let's make this number bigger. And that's will be our adjusted and balance at April 30th. We have our first number. Now what we have to do is to do the same thing, but for the books. For the books, there are two options here. I can use this setup and keep working with this setup, which probably I'm going to do. but later on I'm gonna show you they can be side by side, can be one after another. Let's go one after another because if I change something here, all those alignments that I cross, it's gonna disappear and it's gonna become a messy. So for that reason, I'm just gonna post it everything here and gonna make some adjustments on the terminology. Before I do that, once I cross this, once I put in this statement, the outstanding check 120, I have to clear it. Let's clear this check. And once I put in this list, check 812, 815, 816, I have to clear those one too. So let's clear those one. Let's clear 812. Let's clear 815. And let's clear 816. So the question is there anything in the books which hasn't been reflected in our bank? The only one left is check 811, which we said in the bank is correct, in the books is incorrect. So we have to deal with the books later, but everything else has been clear. Bank is okay. Now let's see what's in the bank, which is not yet in the books. Before we do that, let's see what's happened with our books. From our books, we already know, once I copy this, see, and now I'm gonna paste it in the Excel spreadsheet. What I know from my books is the following. I know that my beginning balance was 8,590, which is my bank reconciliation from the previous month. And my ending balance for the current month is 9,224. So that will be the book end balance, or yeah, it can be statement or accounting statement. Let's differentiate it one from another. At April 30th. And that statement is 9224. So what we're gonna have, we're gonna add something. I'm gonna erase those one and I'm gonna erase those things. We're gonna add something and we're gonna deduct something. The question is what we're gonna add and what we're gonna deduct. Well, we have to figure out. That's our objective. First, we're gonna add something and then we're gonna deduct something less. Now, from where we're gonna start? Again, our balance here is 9224 because all the deposits that we have in the books, which are deposited and accounted in the bank, are clear. And all the checks which we checked are accounted and done. That's why we have this balance here. Now, is there anything, the first question we're going to ask ourselves, is there anything in the bank statement which is not recorded in the books yet? So from everything that we clear in the bank, the only thing that left is the INT, which is equal to the interest. So the bank deposit interest in our bank account, which interest is not in our books. So what we have to add? We have to add the interest revenue, which is from the bank and for the amount of $47. Once I do that, I can close this interest. At this point, all the deposits in the bank have been accounted for. Next thing, check 811. Now, what's happened with this check? The original entry that our bookkeeper did was he debit delivery expenses with amount of let me reduce this one for the amount of 348, and then he most likely he credit accounts payable account with the same amount 348, and the next thing when he issued a check he did debit accounts payable with 348 and credit cash for 348. This is the original entry that has been made in our records, which we establish it's wrong. The entry, which is the correct entry that should have been done, is same thing but different amount. So the correct entry should have been done should say delivery expenses for 834, 834, and the cash has to be reduced by with 834. This is the original entry, which is the wrong one. This is the correct. What we can do? The correct amount is for $834. Wrong amount is for 348. In this case, the difference is exactly this one minus that one. $486. Now the question is, what do we have to do with those $486 difference? Because we have to do something. The question is, what we're gonna do? Are we gonna reduce the cash or are we gonna increase the cash? So currently, in our books, we take only $348. In reality, we should take $834. So in order to fix this mistake, what do we have to do? To reduce the cash with 486 to reflect the difference, or to increase the cash to reflect the difference? What do you think? Obviously, I have to increase the expense because currently I have only $348 in expense. I have to increase it up to 834, or I have to increase it with $486. What should I do with the cash? Reduce the cash or increase the cash? What do you think? Any suggestion? Reduce the cash with 486, and that will be the correct. Thank you, Rico. So what we're gonna do? That will be less delivery, since the whole this problem is related to the delivery. We're gonna go delivery expenses, and that is check number 811. For the amount of 486, we're gonna reduce that amount, our cash. Once we do this, I can easily close this check 811 now. I don't need it anymore. This check has been fixed. So this one going out and this one's going out as well. Next thing on the line is non-sufficient fund. So what's happened is the client who pays us $450, which we already put it as a deposit in our cash. When the bank tried to collect the money from his account, there was nothing in the account. So the question is, we cleared the client account, but did the actually client pay us? Did we actually receive the money? Obviously not. We didn't. So what do we have to do? We have to bring back the accounts receivables since the client doesn't pay. Because if we don't bring the accounts receivables, we're going to consider that this client already pay us, which he did, but there's no money in his bank account. So the bank took the money back from us. So what we have to do, we have to reduce the cash further with the accounts and bring back the accounts receivables for the non-sufficient fund check. And that's gonna be for $450 here. Once I'm done with this, I can easily close it. Non-sufficient fund checks gone. And here I need another one to bring this one. The last thing that left on the charges and the debits is the SK, which is the service charges. At the end of the month, the bank charged me $32 for the service charges. So what I have to do? Reduce the cash with another 32, which will be the bank service expense with $32. Once I do those $32, I can close the $32 and my bank reconciliation is pretty much done. So there's nothing left in the bank that hasn't been clear and accounted in the books. So now let's see what will be our calculations in the books. In the books, we have to add $47 to our balance, and we have to deduct the amount of $968. Now let's see what's going to happen if we do this. Is this going to save our problem? This amount is my starting point, plus interest revenue, which coming to my bank account, minus delivery expenses, which is mistake that I made, minus the money that was taken out of my account because the client who paid me and I cleared his balance don't have money. And the last one is for the bank service expenses, which bank charged me. So my balance should be adjusted ending balance for the books gonna be $8,303. Now, is this balance matching my adjusted bank ending balance? Yes, it does. So that means only one thing. You did your first bank reconciliation. If you haven't done it yet, you already did it. Congratulations. Now, the bank reconciliation is done, but our book balance at this point is still $9,224. Why? Because we haven't taken any journal entry yet. So now, why we're doing this bank reconciliation is to see on our books what kind of transactions we have to do. First, we have to add what we're gonna add. We're gonna add cash. Every time when you say adding, what we're adding, we're gonna add cash. How are we gonna add cash? Debit cash. What we're gonna create? Interest revenue. And then we're gonna deduct cash less cash. How are we gonna reduce the cash? Create cash. What we're gonna debit? delivery expenses, accounts receivable, bank service fee. So let's do it. Because as you can see, my balance right now is $9,224. So I have to add debit cash. Let's do it here. Debit cash for amount of $47 and credit interest revenue for $47. And then I'm going to have debit delivery expenses for the amount of 486. Debit accounts receivables to bring back the balance for this client who didn't pay me, 450. And the last one will be debit bank service expenses for $32. And I'm going to reduce my cash, credit cash with 968. If once I do this, and if I take a look at my cash account, then my cash balance gonna adjusted cash and balance will be the adjusted book. That will be not bank book accounting and balance is gonna be exactly what we come up with the bank. How do you feel about this question? Give me some feedback now. You like it, you don't like it, it's easy, it's not easy, it's interesting, it's super boring. We want to do it again. We understand everything. Let's do another one. What do you say? So far, so good. One comment. What would be the other comment? Or maybe I shouldn't do anything here. Let's leave it the way it is. It's good. Okay. Uh, Adriana, have we done this before?
Yes.
Okay, so you should be flying on this. Is that what you're telling me?
Should be.
Should be. Okay, that's good. That's positive. So let's keep going with this. Let's do another question. Now, in order to do another question, let's do something. I'm gonna do some changes here. Gonna erase all those lines and everything. Do you like these lines? The way we do it with the lines or not?
I think it makes sense.
It makes sense. But now, if you do it on paper, it's a way easier because you just have to click it and that's it. End of the story. Here, with all those information and all those erasing, it's gonna be a little bit more trickier. But I'm gonna try to eliminate everything so I can send it to you and we can start doing this together on the next question. But before we go to the next question, I'm gonna make some changes here. That will be debit. Okay. Do you like it there here one after another, or you want it side by side? What will be more logical to make it side by side? Because everywhere in the textbook where you're gonna see it, it's gonna be side by side. That will be one dilemma that I'm having right now. Side by side is more easy to follow. Yeah, I agree to some extent. Yes. Okay, let's do it side by side then. Just give me a moment to do some adjustments here in order for me to send it to you. And this one here. This one here is gonna move here. Okay. Okay, that statement. Okay, those will disappear. This will disappear here. Trying to find something that is gonna be reasonable. That will be debit here. That will be credit. Okay. So if I grab this one and I post it right here, it's gonna look like this. So what we have to do, some adjustments. I'm gonna make some adjustments just to make it more presentable so you don't have to worry once you see it. Once I send it to you, just give me a second and we're gonna start working with this. Obviously, I have to delete some of most of the information, as you can imagine, because we're gonna work with different numbers. That's our starting point, that's the ending point. So I don't need this one anymore. This will be my journal entry at the end. And if we have to do something like this, which we do have to do, let's bring this one a little bit up. Like this. Oh, like okay, so now what we have to do is delete this one. Outstanding check has to be deleted. And add cash accounts receivable, we don't know what will be that. We're gonna have adding and deducting. And then let's give one more line here just in case. If we have something more like this balance is gonna be disappear, this disappear, and that's gonna reflect all the balances. Great. Okay, I believe we're good. I can send it over to you now. The only thing is let's format this one here, and this format here will be catching everything. Perfect. All right. Uh, that will be March. That will be March, and that will be March as well. The way I look, it looks all right. We should be okay. Let's go and see what's gonna happen. So I'm gonna close this one. First, I'm gonna save it. I'm gonna close it, and I'm gonna give it to you as attachment here on the chat, and we can start again. Okay, in Zoom. Let me attach the file. Okay, you have it, Vivo. Let's go. You guys get it? All right, excellent. Let's go then. What we're gonna do next is the next question, question 2. Let me share my screen so you can see question 2. And the question 2 again is from the Blackboard. Again, bank reconciliation for this company appeared as follows. So this is the bank reconciliation that has happened previous month. In this case, I can copy this bank reconciliation and I can flip it into the Excel spreadsheet on the very top. Let me open that reconciliation. And if I have to share it with you, you probably gonna have the same, and I'm gonna paste it right here. That's my bank reconciliation from the previous month, and I can expand it a little bit, and done. That's the first thing that I have. Next thing that I have on this question is my general ledger shows the following things. So the first thing that we have here is the book balance. Book balance, as we can see, the beginning balance is equal to the ending balance of the previous month. Everything's fine. Then we have deposits for 34,049. 34,049, all the deposits that we made, matching. Then we have the credits, means the check that we write out and send out for the checks written, 43,643, 43,643 checks. So the ending balance of this on our book for the cash is 23,116. So that will be our starting point for our books. Let's grab this one and let's go to the Excel spreadsheet and let's plug this balance for the books. Now I'm gonna go all the way down here and I'm gonna get the books, which is the starting point is 23,116. 23,116 coming here. That's my book accounting statement, accounting balance at April 30th. Next thing that I'm gonna have is go back to the Word document and see this is the deposits and checks issued. The next thing that I have is my bank statement. Bank statement, I have the beginning balance, I have the ending balance. Let's copy it. Move to our Excel spreadsheet. And I'm gonna paste it here somewhere down. Now I have my bank statement. The ending balance for this bank statement is the beginning balance, but the starting point for my bank reconciliation for the bank 19043, 19043 coming here. As you can see, we have a difference between the bank and the book. What's the objective? We to have the same balance on both sides. So what we're going to do, we're going to start checking the bank first to adjust the bank balance first. And after that, whatever left in the bank, we're going to try to fit it in the books. Or whatever left in the bank not recorded in the books, we're going to record it. First, we're checking everything which was recorded in the books, is it in the bank? And after that, we're checking everything which is in the bank, is it recorded in the books? So in order to do that, the only thing that I have left, that I need left is the copy for the deposits and the checks which has been issued, which I'm gonna grab it and I'm gonna paste it right here on the bottom. And at this point, we can start working. Again, we're checking everything that we have in the bank. First, the deposits. Deposits that are in the bank, are they in the books or the opposite? In the books, is it deposited in the bank? First deposit that comes in the bank is from April 3rd for 21,050. Do we have it in the books? I'm checking all my deposits that I made in April. I don't see it. So what do we have to check? Is this outstanding deposit from the previous month? And as we can see, yes, it is. We have it as a deposit outstanding in March bank reconciliation. So this deposit, which was outstanding in March, has been deposited in the bank account. So this one check. So for that reason, now what I'm going to do is I'm going to insert, but I'm trying to insert some symbols. Let's see if this symbol is going to work. See where that symbol ended. Oh, it's going to be added to the, let me see if this is going to work. Okay, reference is not valid. Let's move it. And if I paste it like this, it's not gonna happen. So that's not gonna help me. I have to go with the shapes again and clear the shapes and choose the line and put the line here. Fortunately, I have to go with those lines again. $21.50 clear. Next one. In my books, I have 14,200 and I can see those 14,200 was already deposited in the bank, which is great. So I can clear this one and clear the next one here. Next deposit that I have in the books is for 850, which is in the bank. So I'm clearing this one as well. And another one right here. Next deposit that I have in my books is 13,600, which I have it in the bank. So I'm clearing the next one as well. Next one in the books, I have 945, which I have it in the bank. So I'm clearing that one as well. Next one I have in my books 1,890, which I have it in the bank as well. So I'm clearing that one amount here. And the last deposit that I have in my books is 2,564, which I have it in the bank as well. So I can clearly clear this amount here and this amount here. So all the deposits that I have in my books for the 34,049, which I already recorded and reflected on my cash, has been deposited. So my outstanding deposit in transit in this case are 0. No deposits in transit. Not, you can put it not applicable, or you can don't have to write anything. It's just 0. End of the story. Done. First one is finished. Next one. Let's see how many outstanding checks we have. And we're gonna start again. Checking the check in the bank, which was clear. Is it in the books? First check, check 93. Do I have it in the books? Yes, I do. Is it for the same amount? No, it's not. So I have here, I have one check is in the books is 2590. In the bank is 2509. Let's check the additional information, find out, do we have to adjust the bank or we have to adjust the books? Where is the mistake? Remember, if our bookkeeping make a mistake, that means we have to adjust the book. If the bank made a mistake, we have to adjust the bank. So when we look at additional information here, we're going to see in review the check returned by the bank, the bookkeeper discovered the check 93 for delivery expense, again delivery expenses, was recorded in the cash disbursement journal incorrectly. So our books are incorrect. And we have the NSF check, which is the Clara, which is deposited in April. So we have problem with one of the clients, her checks bounce back. So we have to bring back the accounts receivables. Let's deal with, so technically with this check, the problem is in the books. So we're not going to deal with this check right now. We're going to deal with this when we come to the adjustment to the book balance. Now we can clearly continue with the rest of the check. So we're going to mark check 93 by inserting this crazy shape, which is flow chart, that I don't want flow charts. Or maybe let's see if this is gonna work. It's too much. But I can easily clear it here and put a note here on the check 293 and the check 93 means that I have to do something with this. Since it's too small now, it's not gonna make me. It's gonna make my life miserable, but there you go. 93. I have to deal with this check later. Let's go with the next one. Next one, check which is clear in the bank is check 92 for 5,230. Do I have check 92? I do. Is it for the same amount? Yes, it is. So let's clear it. Let's insert shape now. This check gone. And this check gone. Cannot see it, so I have to grab it from here, put it here. Next one, I have check 84 for $1,890. I don't have check 84 in April. The question is, do I have it as outstanding on the previous bank reconciliation? Let's see. Do I have check 84? Yes, I do. Is it for 1,890? 1,800? Yes, the amount matching, so I can clear this check. This check is gone. And we can adjust this balance here. Move this one here a little bit, and this one is gone. Next one. Check clear in the bank is NSF. We deal with NSF. We already said this is the client which give us a check. We deposit the check in the bank. The bank says there's no money in the client bank account, so we have to bring the accounts receivables back. So the next one is check 95 for $2,900. Let's put this one here, $2,900 here. And let's see, check 95, $2,900. Those two are matching. So if you still cannot see it, so many checks happen. No, this will be like this. And then I'm gonna paste it here, and I'm gonna grab it. Check 2,900 like this. Next one is check 99 for 8,590. 99, 8,590. Everything is correct with this one. I can easily clear this one as well. Next check is check 96, 1811. 96, 1811. So I'm good with this. This check is clear. And clear from here as well. Next one is check 97 for 8470, 8470. The same check, same amount. It's everything looks in order. And one more check I have here, 94 for 3452, 94, 3452. Everything looks okay with this check. Let's clear this one as well. And at this point, we don't have any other checks clear in our bank account. So at this point, we can start chasing which checks are still outstanding. First, is there any checks from the last month which are still outstanding? We can see the check number 79 is still outstanding. And the amount for that check is $1,250. What else is outstanding? I can see here that check 91 is still outstanding. Check 91 for $1,200. So once I put it here, I have to clear it. Otherwise, I'm gonna forget. And if I forget, I may add it again and again and again. So let's clear those checks. Make sure that we are in order. Next check that's left is 98, 2,900. Check number 98 with $2,100, 2,900. And the last check, let's clear it. Last check is check number 100 for $6,500. And I check all the checks. We said 93, we're gonna deal with that later. So all the deposits are clear, all the checks are clear, the bank should be adjusted, and the balance that we're chasing on the other side for the book is to be $7,193. So now we're gonna see are we gonna be able to bring this balance from 23,116 to $7,193. In order to do that, we have to now go to the bank and start checking. Is there anything in the bank that we have to add in our cash? So the first thing that we're gonna see is, yes, there's something, $46, which it doesn't say, but that's interest. $46 interest, which I have to add in in my books, in my cash, in my books. So 46, that's a bank interest. Let's go here, bank interest. Revenue, since the money coming in, and that's for $46. If I'm not mistaken, yes, $46. This one is done. Next thing, now checking the deposits from the bank, all amounts which are on the deposit sides has been checked. Now the last thing that left unchecked, so deposits in the book checked. The checks released from the books checked. Deposits in the bank check. Cash going out from our bank. First one was the check 93. Let's see what's happened again. Check 93 was for the delivery expenses again. So we debit delivery expenses. Let me see how exactly was that. I can easily copy this and paste it. You can do the same. Debit delivery expenses. Now the amount's gonna change. The question says that the bank again is correct. So 2,509 is the bank, 2,509 is the bank, 2,509 is the bank, and 2,509 is the bank. And the books are incorrect in this case. So we have to deal with the books. Actually, I'm gonna copy it from here, paste it here, and I'm gonna delete this. So the books are my problem. Where is my problem in the books? The amount. In my books, I have different amount. $2,590. 2,590. 2,590, 2,590, and 2,590. So now the correct amount is in my calculation here. The correct amount is for, I can easily cut this one. No, actually I don't want it. I want to copy it, paste it here like this. The correct amount is the bank, which is 2,509. The wrong amount is the books, which is 2,590. So I have a mistake of $91. What happened now? What do we have to do with the cash? First, let's think about it. We credited cash of in our books 2,590, but we're supposed to credit only 2,509 or $81 less. So now what do I have to do? Since my cash already showing that I'm taking $81 more cash, what do I have to do with the cash? Do I have to add it or I have to deduct it now? What do you think? Add the cash. Thank you, Yuriko. We have to add the cash, which will be the delivery expense, which is check number. What was the check number? Check number is 93. $93. So we have to add $81 in our cash. Okay, great. Let's keep going with this. We fix this check. Everything is fine. So now I have to mark it as clear. And here I'm going to mark it as clear as well. Now all the checks here have been checked. Everything is clear. Next one, I have no sufficient check. Again, the client pay me, I deposit the money, I clear the client account, deposit the money. The bank says, no, there's no money in the client account. I'm taking the money back. So if the bank take the money back, we have to bring the accounts receivables back because the client hasn't paid us. So what will be that? That we're gonna reduce the cash. Since the money going out from our account, I have to reduce the cash here and to increase the accounts receivables. Accounts receivables for the NSF, non-sufficient fund, it has to go, the cash has to go down with $6,540. Next thing, once we're done with this, we clear it. Next thing, we have a payment. Payment of what? Payment of the principal on loan. Let's go. Next one, loan payable. And we paid $9,420. And once we clear it, let's move it from here. Next thing that we paid is the interest on the loan, $35. That will be interest expense. With $35. And the last thing that we paid is $55 for the service charges. Bank service fee expense will be $55. And we clear this one. At this point, we clear everything. Now let's go to our calculation. Once we take a look, we have a discrepancy, but we haven't calculated here the total. Let's put this total here, which will be equal to the sum of those two numbers. Once we added 127, let's see what's going to happen now. I have to change the formula here. This formula doesn't work. Equal to beginning balance plus what we're adding to the bank account, to the cash account, minus what we're deducting from the cash account. And magically, we came up with the same balance and we balance our bank reconciliation. So when currently in the bank account, we have $19,443. When the balance in the bank is going to become $7,193. When those four checks are clear in the bank, when the vendors go to the bank, deposit their checks, which we wrote them, then our bank balance is going to be 7,193, which is exactly our book balance. Now, let's not forget, our book balance right now is 23,116. So what we have to do? We have to start doing the journal entry. What will be the journal entry? First one, this one, we're going to add the cash. How are we going to add the cash? By debiting the cash. And then we have to deduct the cash. How are we going to deduct the cash? By crediting the cash. So if I'm debit cash here, all those accounts has to be credit, credit, credit. Bank revenue, credit. Delivery expenses, credit. And if I'm creating cash, all those accounts has to be debit. So let's do it. Debit cash, we're gonna debit the cash with $127. And we're gonna create interest revenue for $46. And we're gonna create delivery expenses. Actually, I'm gonna copy this, move it here, and start again. That will be 127, and the interest revenue and the create delivery expenses to reduce the delivery expenses. And that delivery expenses will be for the amount of $81. 46 here, 81, total 127. Done with this. Next one. For the next one, I'm trying to avoid any adjustments here. Let's see if I can be able to manage it. I'm gonna copy and paste here. I'm gonna cut this one here. And the next one, I'm gonna start with first one, debit accounts receivables. Accounts receivable is gonna debit it with 655,540 to bring that the balance for the client that I clear as a payment, but bank take the money back from my bank account. Next one, I'm gonna debit loan payable for the amount of $9,420. Then I'm gonna debit interest expense. Interest expense, I'm gonna debit it with the amount of $35. And the last one that I'm gonna debit is the bank service expenses with $55. Then I'm gonna create cash with 16,050. And that's how I'm gonna bring the balance on my books from 23,116 down to $7,193. And that's how we're doing the bank reconciliation. Now what we have to do now, repeat it again. Before I repeat it again. So in question 3, let's see what's the information. In this case, we have the cash receipts and cash payment. Now, if you remember from the chapter 7 on the journals, we have 5 journals. One is for the sales, the other one is for the purchases. Then we have cash receipt journal, cash payment journal, and the last one is the general journal. Now, from the cash receipt journal, we're going to get all the cash that we received, which directly is related to the cash. From the cash payment journal, we're going to see all the checks that has been issued, which directly related to cash. So once I have the beginning balance, so the cash account for this company shows the beginning the showing balance 19,323 on November 1st, and balance of 26,983 on November 30th, 2023. So in other words, what you can do is once you have the beginning balance, this balance it's not necessary to be given. It might not be given to you. The question is, can you get it? Of course. What you need the beginning balance plus the cash receipts minus payments, and you're going to get the ending balance for the cash. So 19,323 plus 2608 minus 12,948 is going to give you 26,983. So this balance, ending balance, sometimes might not be given, but doesn't mean you cannot get it. So now we have what's coming in, what's going out from the cash. Bank reconciliation from the previous month shows the following. On October 31st, we have the beginning balance for the ending balance for the bank and adjusted balance for the bank. We have one deposit in transit, which hasn't been deposited in October. Most likely this will be deposited in November first thing. And we have two outstanding checks for $400, $500 or $900 in total. As we can see, adjusted bank balance is equal to the adjusted book balance, so we're perfect. That should be adjusted book balance, not bank balance. So let's copy this and let's move it to our Excel spreadsheet. Just a second, let me open it because I close it. Otherwise, I won't be able to share it with you. Let me open it again and put the information, share my screen and put the information where it belongs on the very top. I don't want to share this screen. I want to share my bank reconciliation file, which is, all right, this one. So right here, I can easily post the picture for the bank reconciliation from the previous month. What we're chasing here, deposit in transit. We expect that deposit in transit to be deposited in first thing in November. And we have to see which one of those outstanding checks from the previous month, October, has been clear in November bank statement. Now, next thing on the question, if we take a look at the question, let's go back to the question again. Give me a second because I lost the question somewhere on all the screens that I have open. I found it. There you go. So the next thing on the question, we're going to see the bank statement. Now you're going to see now that this bank statement look very much like a bank statement. So this is kind of more realistic scenario. I'm going to paste it in the Excel spreadsheet. And I'm going to come back here in a second. And once we have these bank statements, we're going to see the explanation. EFT is electronic fund transfer. NSF is non-sufficient funds. Now, for the additional data from the bank reconciliation, is EFT deposit was received on the rent for special event. NSF check is received late in October from a customer. So the customer, again, we deposit the check, clear the customer account. There's no money in the customer account, so we have to bring back the outstanding balance for the customer. Bank collection for the not receivable. So bank collect for us not receivable, which including the interest revenue of $100. And correct amount for the check. So now we have problem with the check. 1227. A payment on account is 4,896. The company account mistakenly recorded check for 4,468. So the problem here, the mistake with this check is in the books. So we have to adjust the books later. Okay, so now we can start with the first part, which is the bank. Let's get those checks. Copy from here, stop sharing this and go to the Excel spreadsheet and start doing our bank reconciliation for the bank. I already told you that I have the bank statements. I already pasted, and I'm going to paste here this information here. And I'm going to start clearing one after another, the way we did it before. First, what we're chasing first? Deposits. First deposit that I have in the bank is for $2,000 on November 1st. Do I have that deposit as outstanding? Yes, I have it as outstanding on October 31st. So the outstanding deposit has been deposited. It's not longer in transit. It went to the bank account. Let's clear that one first and let's move on. The 2000 has been deposited. That's not longer a problem. So I can clear it here as well. 2000 gone. Next thing. Now I start checking my deposits in the books. Were they deposited in the bank? For deposit in the book, November 5th, 3436. Was it deposited in the bank? Yes, it was. So let's clear this deposit here. And we're matching it with exactly the same deposit here. Gone. Next one, deposit 470. Do we have deposit 470? Yes, we do. So we're matching this deposit here with that deposit right here. Next one, we have deposit 1723 in our books, which is deposited in the bank. So we're clearing the books and we're clearing the banks. Then we have deposit 1065, 1065, clearing the bank, clearing the books. Then we have deposit for 41, deposit for 41, clearing the books, clearing the bank. Then we have deposit 10875, 10875, all matching, deposit here gone, and deposit here gone. Last deposit I have in my books, deposit 2598. Now I'm checking deposit 2598 and I don't see anything like that. What that means? That means that the deposit is in transit. So what I have to do? Add it to the bank. Deposit in transit. We have deposit in transit, outstanding deposit. That's November 30th. And that deposit is for 30th. And that deposit is for 2598. So one thing that I forgot to do is, that will be November 30th here. One thing that I forgot to do is first to adjust the bank reconciliation because it's not for April 30th, it's for November 30th. And the other thing is to enter here the bank ending balance for November 30th, which when we look at the bank statement, the ending balance for the bank for November 30th will be 29914. 29914. And that's our starting point. Now we have first adjustment, which is to add the deposit, which was recorded in our books, but not deposit yet in the bank. Now let's see, is there any outstanding check? So once we clear this one, I can easily clear it here. All the deposits which are in my books are already accounted for. Next thing, we're going to the bank records and start matching the checks. Check 1221 for 1819 was cleared in our bank. Do we have that check in our records? Yes, we do. Exactly the same check number, exactly the same amount. So what I can do, I can easily clear this check. This one here, and this one right here. Next one, I have check 1222. I have 1222. Amount is 1144. Amount is 1144. This check in matching. So I'm good with this check. I can easily clear it. Next check is 1223. 122 1223. 1223. 429. 429. We're good. This check is gone. And on this side, the check is gone too. Next check, clear in the bank. 1,224, 1,224. Amount is 111. Amount is 111. Do you know what's the beauty when the amount is 111? It doesn't matter how you're gonna flip the number, there's never gonna be a mistake. And you're always gonna be correct. So let's clear this check, 111, and clear this check here, 111. Next thing that we have is in the bank was clear check 1225, $816. 825, $816. Check matching, amount matching. I can clearly clear it. 216 and 216 here. Next one is check 1226, 109. 1226, 109. Matching, so I can clear it. There. Next one, 1227. The one that we read about was 4968. In our records is 4468. We already know from our records that we made a mistake. Bank is correct. So what that means is that once we take a look at the information, it says the correct amount of the check is 4968. The accountant mistakenly recorded the check at 4468. We're gonna deal with this check when we're doing the bank adjustments. The book adjustments. As long as it's not part of the bank, we don't worry about it. We're gonna mark it, but we're gonna make a note. Mark it as a clear, but we're gonna make a note. Insert, and I'm gonna insert some shape, which is gonna look like, in this case, let me choose something easy so I can easily correct it. Let's go with this one. Oops, that's enormously big, but I'm gonna mark it like this. And this arrow, I want it right here for this one. This is the one that I have to deal with later. Next one, I have check 1219. 1219, I don't have it here. So if I don't have it here, where should I look? Most likely I should look up on the bank reconciliation from the previous month. Do I have check outstanding 1219? Yes, I do. What's the amount of the check? 500. Is this check clear in our bank? Yes, it does. So what I have to do, I have to mark it as a clear check, clear 500. And here, I'm gonna mark it as a clear check as well. 500 is gone. By looking at our bank account, I don't see any other checks which has been clear in our bank, which we haven't checked, we haven't accounted for. So what we have to do, now we have to see how many of those checks which we issued, are still outstanding. First thing first, let's go to the bank statement, bank reconciliation from the previous month. Is there any check from the bank reconciliation from the previous month that's still outstanding? As we can see, the check number 1218 is still outstanding, and that check is for $400. Once we clear it, we can cross it. Nothing left here. All is accounted for. Let's move to the checks which we issue. Check 227, we said we're gonna deal with it we have to adjust the books. The three outstanding checks are, this is clear, this is clear, 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 clear. I have 1, 2, 3 checks outstanding. 1228, 1229, 1230. Let's go here. Number 1228. The next number is 1229, and the last one is 1230. Amounts. 28 is for 998. Next one is 330. And the last one is for 2724. And we have our total. Total outstanding checks is for 4,052. Let's double check the calculations, just in case. For 52, yes it is. And this number is this one plus this minus this. So we have our adjusted bank end balance should be 28,060. Now we expect to see the same number on the books once we finish with the books. Let's see if this is gonna happen. When we're gonna have 28,060, when to the current balance that we have in the bank, we deposit the money that are outstanding, and all those four checks are clear from our bank account, then we're gonna have 28,060. Books. What we're gonna do with the books? So we're gonna start with the ending balance for the books. What was the ending balance for the books? We have to check the information, and from the information that we're gonna see that the ending balance for the book was 26,993. And I'm gonna enter this balance here. Paste special. I'm gonna special that like this, 26,983. And then we're gonna start chasing. Is there anything on the deposit side in the bank statement which we have to add to our cash balance? First thing that we're gonna see, EFT rent collection. So we collected the rent revenue for $880. Let's record it. I'm gonna clear it just not to forget. I'm sorry, not this one. And let's go. Add rent revenue for $880. Next thing that they coming in the bank is the bank collection. Now this bank collection, from the information that we have in the Word document, says that the bank collected for us a note receivable, which inside has 100% interest revenue. So we have to separate the interest revenue from the note receivable. So let's do that. And make the appropriate journal entry here. No, the journal entry at this point will be adjustment. Let's make this appropriate adjustment. So what I'm gonna do is I'm gonna extend this format here. Oops, this one is not the way I want it to be. Here we go, this one is fixed. Gonna flip it here, gonna delete this one, gonna delete this one. So next one we have note receivable and interest revenue. We already know our interest revenue is $100. The total note receivable that we received is 1,430. So minus 100 is going to be 1,310. Oops, and 30. $330. And $30. So in total, we have to add sum of all these numbers. And we did it. And we're done with this. Next thing. Since we added all those amounts, I can clear the last amount that left here for the note receivable plus the interest, which is bank collection. Now let's go to the next side. On the other side of the withdrawals, money going out from our bank account. First one going out is NSF. The client that said it paid, it didn't pay, so we have to bring the accounts receivables. Before I do that, let me clear those one checks because I forgot to clear those checks. Since we already added to the bank, we have to clear those one. Okay, so first one is the 433 for NSF check. Let's add it here to accounts receivables in bracket non-sufficient fund check. And that will be for the amount of $433. Next one, let's clear it. Next one, we paid insurance. EFT was for the insurance expense. So let's do this insurance expense. And that insurance expense is for the amount of $275. And let's clear it too. Insurance expense go. The last thing that, no, the one before last is the check 227. Now we already said the bank is correct. Correct amount is 4968. Wrong amount is in our books, 4468. So we have difference of $500. So what's happened? We made the wrong entry. What we did, debit accounts payable, and we credit cash. Accounts payable, we debited with the amount 4468, and cash we credited with the amount 4468. Correct entry should be that's not what I wanted. Correct entry should be 4968 and 4968. So at this point in my books, I deduct only $4,468. In reality, I should have deducted $4,968 or $500 more cash. So what should I do? How can I fix this mistake? By adding cash or deducting more cash? What do you have to do with the $500? To add them to the cash or deduct them from the cash? Deduct more cash. Let's go. And that will be accounts payable. In this case, that will be check number. The number of the check was 1227. 1227. And we're going to deduct 500 extra cash for that. Now, the last thing that left, let's see what's the last thing that left. So once we clear the check, I can easily mark it as clear here, mark it as clear here. And the one left is the $25 service charges. Let's move those $25 service charges. That will be bank service expenses with $25. And once I do that, I'm gonna get those totals. Now, as you can see, we have to check if those amounts are correct. Those amounts are correct. The last one I have to check is this one plus that one minus this one's what's going to give me. And I have a difference of a lot. So what we have to do, we are missing something. Let me see what we are missing. Who's going to tell me what we are missing? Okay, let's go. Let's find out what's the difference. The total is 23, 28, 60 minus this one. We have difference of 4,620. Now, if we make the mistake on the opposite side, if we divide it by 2, this one divided by 2, we can, the other way, we can chase mistake for $2,310. If we debit it instead of credit it, if we put it on the one side versus the other one, that should be the mistake. So this one is very, very, very tricky, right? This one is the amount that we chasing. So let's delete this one, and let's delete this one. And our starting point again was, let me check what was the starting point. On the Word document, the starting point was 26,983. 26,983. Then we have to add all those amounts. And if we do that, our balance will be 24. Now, as you can see, this one doesn't work, right? If I add to 26, when I add 2,310, it cannot be 24,673. So I have to delete this one and put a new formula, which formula is going to be equal to this one plus that one. So now I'm 29,293. Once I add all those checks, let's see what will be the amount. This one plus this one plus this one plus this one. I'm going to have 1,233. And once I deduct this amount, and our mistake, it disappears. So what happened is, instead of adding this amount to our ending balance, we actually deducted. And that's why we have the mistake. So once we fix the formula, everything is correct. And that's how we're doing the bank reconciliation, and that's how we're chasing mistakes. Questions? We're missing something here. The last thing that left is to do the journal entry. Let's do the journal entry now. Because if we don't do the journal entry, our cash balance is still gonna be 26 983, and we don't want that. So what we have to do, we have to add the cash. How much cash we're gonna add? $2,310. And why we're gonna add that one? Because we're gonna have the interest revenue of $100. Then we're gonna have credit will be for the rent revenue. Let's start with the rent revenue. Let's start with the way the order. Rent revenue is the first. Rent revenue in our case is 880. Then we're gonna have credit not receivable. The one that the bank collect for us, that's $1,330. And then we're gonna have credit interest revenue with $100. All together give us the debit of cash. Credit of cash will be, first credit will be for the accounts receivables, the NSF, which is 433. Then we're going to have insurance expense for 275. Then we're going to have accounts payable to adjust the amount with $500 mistake that we made. And the last one is the bank service expense, which $25. Total cash in this case is equal to sum of all those amounts, or $1,233. Once we do this entry, our bank balance and post those entries, our bank balance will be 28,060, which we want to be. Now we can say the bank reconciliation is over and the journal entry has been made and the cash balance in our books is adjusted to reflect the actual cash that we will have once the deposit is deposited and the checks outstanding are cashed.